All right, ladies and gentlemen, as you can see, we have our 3 panel presenters for the panel discussion. Second one we've had here today. The other one, the previous one, should I say, with our 5 panel presenters, was quite informative, I have to say. Quite informative. So this works quite simply with me providing 5 questions for each of the panelists to answer. They have 90 seconds to answer the most comfortable they can. And there goes my microphone. Excellent. Gentlemen, how's the day? Fantastic. So I'm going to be starting by introducing each of you. 0.3? 23. The answer is 23. It's always quality, not quantity. All right, ladies and gentlemen. Again, going to be doing a quick introduction. From TeraFX, we have Mr. Mohammed Halim, and from Avatrade, Dar Ferguson, and of course from NCM, we have Mr. Sami Hamid. You'd swear I haven't done this before. So ladies and gentlemen, we have the 3 panels here, and I'm going to ask the 2 microphones. Wow. I must be special. I'm going to ask 5 simple questions, each panelist having 90 seconds to share their answers. So individuals, starting from left and onward. First question, how do you see the Forex and CFD trading in 2021 and in the future?
Okay. Good afternoon, everyone. I'm really happy of being today with you, providing this panel discussion. So, answering this question mainly depends on the global volume of the FX. I can say that FX and CFDs market is the most famous market that reflects a true image of the global economy performance, where the investor is able to invest his views in this image and how to execute his views in this image whatever the conditions of the market and whatever the circumstances are. Even during the hard times of the global economy, we have witnessed an increase in the volume of the Forex market generally. It's all about the easy access and the ability of the client to execute his views in the way he sees the market is going forward. So either with the long buy or the short sell, there are always options for the trader, allow him to invest his expectations about that market. So for example, during the financial crisis in 2008, we have witnessed an increase in the global volume of Forex market. I can say that in 2008, the global volume or the global trading volume has increased to 55% or 53%, I'm sorry, in 2008 compared to 44% in 2007. So yeah, as I told you, it's all about the opportunities that the investor could use, using his viewpoint towards the market. Another example, which is COVID-19 global crisis, we did see some brokers reporting a bigger volume in 2020 compared to 2019. Yeah, I'm fine. Yeah, sure. So, okay, yeah. So mainly, generally speaking about my answer to this question, I can say that there is a positive overview for the upcoming year, which is 2021 for the Forex market, considering that most of the traders or the investors, they are looking to 2021 as the recovery year. Thank you so much, of the COVID-19 for sure. Thank you so much.
It's going to come join you guys. Moving on, dear.
Yeah. Thanks, Mohammed. That was very insightful, I think, for everybody. It's hard to get all of this in 90 seconds. To get a whole year in 90 seconds is a tricky thing to do. The first thing I would say is that if you look back historically, every year has something. There's always something that is in the markets that spooks the markets, that creates volatility. You go through periods where it's quiet. But if you look back, you have earthquakes in Japan back in 2013. You had the Swiss franc financial crisis You had the boom in crypto. You had ESMA that came into the European markets, which is now filtering in through the rest of the industry and with regulation. And then this year we had coronavirus, and next year is going to be the coming out of coronavirus and what that will create. I think for the future next year, for the MENA region, for global, it's about more and more regulation that's coming into the industry. And I think that's something that's going to shape the industry as it goes forward. Volatility is risky for traders. It creates opportunities for clients, which is fantastic, which is great for brokers, which gives more volume. But with greater risk is greater reward, but greater downside as well. And I think regulation forms a very concrete part of for clients and how to be protected, to trade with brokers that are respectable, that are well regulated, that have good risk management policies. And I think that's something for any client that's out there, when they're picking a broker, they need to make sure that they're looking with people who are regulated both in their own region, the UAE, locally, or on a global scale. And that's one of the things that we set ourselves apart, that we are one of the most regulated brokers in the world. We're also building risk management tools, and I think that's one of the questions that I might explain to later. A thing we call Avatrade, which is actually how you protect your trade against the volatility that's coming in the market. So I think volatility is, while it's great, you need to make sure that you're able to manage it in a controlled way, because what we don't want to do is people to jump in and they're straight out of the market already.
Hello, glad to be here with you on the stage, actually without a mask like you guys. For this year, 2021, and for the business, I do believe that most of the brokers and the clients and the companies in this industry have got a lot of work, a lot of business because of the pandemic. All of the other industries have been struggling from the situation lately. But for us as the financial sector and technology sectors, most of the companies have good business, great opportunity to see what the market needs, what the clients are looking for. As my colleague says here, the volume have been increased in the markets globally. The situation with the American elections have done very good to all of the clients and for the business as a total.
Answers, guys. So moving on to the second question. Do you feel the expectation of traders are being fulfilled by brokers? And what kind of support or education can they expect from brokers, especially traders and investors in this Middle East region?
Okay. The short answer for this question is yes. Considering the nature of the FX market being the largest market in the world and the most liquid financial market in the world, the variety of financial brokers, the ability of the trader to start trading anytime within any amount, also the ability of the trader to experience a risk-free trading experience, which is a demo account. So I can say also the strong competition between the brokers and the variety of the services and technology provided by them to the traders ensure the fact that the expectations of the traders are well maintained. Yeah. So for the support that should be given to the client or to the trader by the broker, I believe is very necessary to involve the client in the hot topic that affect the market significantly. This is really important. One more thing is to respond or to show a quick response to the traders' concerns in terms of the market fluctuations. Also, there is something very important which I'd like to raise, which is the security of the funds of the trader. The broker, he has to keep maintaining a solid regulation with a solid financial bodies, in which I'd like to renew my wish to see different or in the variety of financial regulators within the Middle East region. For the education part, I guess, is very important to organize time-to-time seminars or webinars by the financial analysts, for example, of the brokers, okay, in terms of teaching the trader about the the new trading strategies that could be benefit for them, and of course of keeping them updated of the market conditions. So yeah, that's my answer for the question, really. Thank you.
I'm going to split my answer in kind of two if I possibly can. The first one is about systems reliability, which I think goes without saying, and every broker strives to have the most efficient pricing mechanism, execution for clients to make sure that the client is comfortable with what they get and how their trades are executed. You combine that with a customer service business or customer service division, which means that you have 24/7 reliability to service your clients. So when they do have queries, especially for novice clients, you are able to facilitate that. You have chat rooms that are 24/7 live, and I think more and more companies are building that part of their, enhancing that division within their capabilities. You expand it into education, and of course, again, not saying anything that nobody doesn't know, education is a huge part of it. A more informed client is a better client, is going to be a longer-term client, because they're able to make better informed decisions that will keep their trades for longer and they'll be able to trade more and more. The one thing we have done, and I think we've gone above and beyond at Avatrade, we've built a product that is completely unique to the industry. It's called Avaprotect. And I would encourage anybody out there to go to our website, download our app, and what we've built is when you execute a trade, and especially for new traders, you believe, and just take Eurodollar as an example. Eurodollar is going up, that's your trade, you believe in it. But you want to protect it because you're not often right, and there's a good 50% chance you're going to be wrong, at least. So we have a simple click of a button, and then by clicking the button, you click on Avaprotect, and what it does is it exercises an option in the back of your trade. You don't need to know how it works, but what it does is it protects your trade with an FX option in the back end. The consequence of that is Eurodollar goes up, you make money, fantastic, you paid a small premium for the price of assurance and reliability. The trade goes against you, which unfortunately quite often does for clients, especially new clients. What happens here is the FX option kicks in, refunds your money straight back into your account online. You can do it for 1 hour, 2 hours, 1 day, 1 week. And we have that across all our FX instruments. We're adding it in oil, we're adding it in derivatives, in S&P, etc. And this is completely unique to the industry, and this is how we are protecting clients. We don't want clients to lose money. We want clients to come back, to keep trading, and even when their trades do go wrong, they're still back and they're still able to continue trading. And I think this is one thing that I would encourage anybody to check it out, because it's going to revolutionize the industry going forward.
Thank you. I will just go through the education because the colleagues have answered the first part. Actually, with these situations nowadays, most of the companies, have built their own platform and strategy for their clients. Most of the traders cannot meet their account managers or their market analysts face to face, so they have to do this through webinars, through online research. They have to do better and safe ways to trade. So I think that education through academies and webinars and seminars, all of this stuff had helped these traders to get involved in the business more heavily.
All right, gentlemen, with the next question, what kind of skills should an individual possess to trade professionally in Forex, CFD, stocks, indices? And is there a roadmap to becoming a professional trader?
Okay. I believe there are main essentials that should be available with the trader all the time, like when he decides to trade in the FX market. First thing, he has to be, or she has to be, of course, understanding the nature of the FX market, understanding the fundamentals of the Forex market. Of course, when you decide to invest your money in some product, you need to understand the nature of this product. Second thing is the ability of the trader to do some high quality research in the market analysis in terms of fundamental or technical, wherever. Fundamental, I believe it's really necessary to follow the market news and the research reports issued by the big investment firms. And for the technical side, I believe it's also important for the trader to learn how to read the charts, how to appoint the resistance support points, for instance. So all of that is really important. And the third thing, he has, or she has, I mean the trader, to be able to show some patience to the market. Of course, when you show some patience to the movement and the fluctuation in the market, you can learn from the highs and the lows in which you can translate this learning to successful trading decisions in the future. And last thing, I think it's really necessary to be reasonable when you decide executing an order in the market, to be reasonable in accordance with your size of assets or equity. So these are the mainly essential things, like I believe they are very necessary. Also, the trader, he needs not to be too much greedy, so he should be like in the fair value of like making profit. Thank you.
I think the first thing I would say is trading is hard. It's not easy, and anybody who tells you it's easy are just plain lying to you. It's hard, you know, professional people who work in, will say, I'm just going to say like banks, etc. They work under very strict limits and they're extremely disciplined. If you want to be a trader today, the only thing that matters is discipline. If you decide before you make a trade, you need to have an in and an out. You need to have a take profit, you need to have a stop loss. If you execute your trade and it goes against you and you have your stop loss and your money, You've got to have the decision made before you do it. You've got to follow it, you can't change it. If your trade goes with you the other way, you move your stop loss up and you protect it. But the mistake people is they think they can make 10% in a week, and then they're going to do it again, and they're going to next week, 10% next week, going to make 20% next week. The best hedge fund managers in the world, if they make 15, 20%, it's phenomenal. So to make 15, 20% in a year, you can't do it in a week, you can't do it in a day, and you can't do it over and over and over, because eventually you lose if you do it that way. So be informed, educate yourself, and make sure when you're going into a trade, you have a defined strategy that you do not change no matter what, even if it means you're losing money. What people do is they're making a trade and it goes against them, and you sit and they watch it, and it goes, I'm losing $100. That was my get out. It'll come back, it'll come back. Mentally, it's a human psychology. Next thing, it's at $200. You're going, what am I going to do? And you start to panic. And you leave it, and next thing, it's $1,000 negative. On the flip side, when the trade goes up, and you're $20 up, and you had targeted to make $100, you're closing your trade. You're closing it because you want to take the profit quickly. You've got to apply the same mechanism on a profitable trade to a losing trade. And if you do that, it means you're a much more disciplined trader. And this is the only way to be successful in the trading world. Discipline, discipline, discipline. And the product I talked to in the last question about, the Avaprotect product, that's what we do for you. We give you that discipline with a click of a button. You put on the trade, you know what you're going to do, and with a click of a button, you put in Avaprotect. That is your safety net. That is your get out of jail card. Because when the decision goes against you, that you need to close and you don't, that one kicks in and automatically puts you back into reset your account. So I would say discipline and use the tools that are available for you, especially if the broker is giving it to you free of charge.
Okay, for me, I think that knowledge and information is the key to be a good trader, whether he or she would like to have a deal, as Ferguson said. He had to get the knowledge how to deal with the trade. He have to know what is his strategy, to have his goal, to determine exactly what is he looking for from the market. Otherwise, he will be stuck in the market. Information also is another way of being a good trader. You have to follow up the news. You have to follow up everything in the market to get the news before others get to make your reaction accordingly. So in NCM, as NCM traders, Noor Al-Mal and NCM, we've been trying to build academies for training from almost 5 to 10 years, 5 to 6 years, sorry, for all of traders to get involved and take more training in the business.
Right on, guys. So moving on to our next question. What are the profitable trading strategies in the upcoming market conditions and the best risk management practices that you'd advise traders and investors currently?
Okay. I think there are 5 main strategies could be followed by the trader in an answer for that question. First strategy is the news strategy, in which the trader could use the news of the market to expect or predict the market movement. Second, the strategy is a swing strategy, so the client or the trader depends mainly on the market fluctuations and the market movement, in which he could decide to buy in terms of his prediction that the security will go high, or to short sell if he predicts that the security will go down. So this was the second strategy. The third strategy is the day strategy, which means like the trader could dedicate his full time or his full day, okay, just for trading, watching out the news, watching out the market data, okay, so it's like a full-time profession for him. Fourth strategy is the trend strategy. Like there's a famous quote says the trend is your friend. So whatever, when you decide to use like the technical analysis, you reading the charts, of course, like to predict like where the trend is going. So I think this is something important for the trader to follow as a strategy as well. The last strategy is the end of the day strategy, which means some traders depend on the market when it closes or the closure times of the market. So they decide to execute some trades in which they see the market or the price will settle or close. Yeah. For the risk management, I do recommend usually a lower leverage ratio when the trader is going with a small amount of investment. And it's also very important to estimate well which leverage ratio you are going to select in accordance with your size of capital. And the most important thing before going live to the market, I advise any trader or anyone like is about to enter the Forex market to practice or to have like some demo experience before he execute his live orders in the market. Thank you.
I, unfortunately, am going to disagree with you slightly, Mohammed. I don't think there's 5 strategies in trading. I think there is 1 or 2 strategies. There's 2 strategies. One is you decide yourself what your strategy is. Nobody can tell you that this is the best strategy for you, that you should do this or you should do that. Some people like Forex, some people like crude oil, some people like indices, some people like moving averages and RSI, etc. Only you can tell you what you like to do, what your strategy is, and how best you can follow on it. You can learn all the techniques. You can read and you can watch video analysis and you can practice on demo accounts, which I absolutely encourage every single person to always do. And if you do use a demo account, you apply the same methodology I said in the last question about discipline, because you get a demo account with 100,000 in it and you can lose 100,000 in a minute. You have to make sure that that 100,000 is your own money. So that's, I would say, everybody has their own strategy. What I like to do and how I trade is going to be different from Mohammed and different from yourself. Everybody's different, and that's, again, human nature. So you can't put, it's like putting squares into round holes. It's never going to match exactly. You're never going to find something unless you decide what to do. So it comes back to discipline, planning your trade, what you're going to do and how you're going to do it, and follow through on your strategy. The other option, if you don't like any of that, is to copy somebody else, is to use social trading. We launched a thing called Avatrade only recently. That's the easy way out of it, but you just click in and you follow somebody else. They're going to do all the hard work for you. They're going to do the analysis, etc. But even if you do that, you still got to do the same research on the people that you're looking to follow. You got to look back at their background, what they've done, look at their history. Have they been profitable? Do they run losses? Do they close trades out quickly? So whichever you decide, whatever option of those two you pick, it comes down to you making the decisions at the end of the day. You need to make a planned decision. Yes, I'm going to do it my way. No, I'm going to follow somebody else. But even if I do that, I'm going to do it my way as well. So at the end of the day, you're the decision maker. You can't look around at the end of the day and say, yes, that was a great trade. Because if it is, you made the decision. And if it's a wrong trade, there's nobody else to blame but you. It's your money. So protect your money.
Okay, that's good actually. For me, I think lack of money management is one of the main points that traders have to take care about. Also, I think that changing your strategy during the trading hours would be very, very, very bad for traders. So you have to maintain a static strategy during the trading hours. You don't have, as he said, to shift from selling, buying, selling, overbuying. The other thing that you have to maintain a certain margin in your account to be not liquidated in the market, because most of the clients are over trading in their accounts. So this is, I think, it's a big mistake from trader side. People have to take care of the margin during the trading hours, especially in the, let's say, rapid times or hectic markets. I think also you have some of the clients are facing problem with the protective stop loss and take profit. This one is a must in the trading for any successful trader, whether he or she, he have to maintain stop loss, take a profit in the market to minimize the error or the human error that could arise from emotional reaction. That's
Excellent answers, guys. So finishing off from questions for myself. We are coming to the end of 2020 here, leaning into a fresh new year, and the future is looking close. So what are some take-home strategies that you guys would like to share with the traders out there?
Okay. Most of the facts we recently acquired for the FX business or FX market within the last 2 quarters of 2020, it invites us, of course, to be optimistic of a better year in 2021. For example, we have witnessed like a high volatility in the FX market within the last 2 quarters. We have witnessed also a high volume in November compared to October. So I believe the business cycle of the FX business is getting better, and we are actually entering the 2021 with an optimistic view for the future of the industry. But at the same time, with the news of the new vaccines like released recently for the COVID-19, I believe even when we are optimistic of a good year ahead, which we all wish, of course, we have to be very careful for any negative surprises happen. We have also to follow like adequate strategy before executing any decisions in the market, following like a positive emotions about 221 or something like this. So we have to be like careful all the time for any negative surprises happens. But at the same time, I would say that I wish everybody like a brilliant and a good new year ahead. And hopefully we get all of us like a free mask in 2021. Thank you. Thank you so much.
I think the one thing I would say for any trader is, for me personally anyway, and I can't speak for anybody else, but I can speak for myself, follow trends. The market is much bigger than any one of us. The market is much bigger than, you know, people in this room or people in this country or people in a bank or people. You can't fight the market, and I would never try to fight the market. You know, if anybody's ever been to Pamplona, you know, when the bulls are running, you run with the bulls. So get in and follow it. I wouldn't try to fight the market. I wouldn't try to reverse trend the market. In the same way, if there's a bear, you get out of the woods. Bear's coming at you, you get out of it. So follow trends and look to see what's running. You know, right now cash is all the governments are printing money, so cash is cheap. which means that there's opportunities probably well into next year as there's a recovery, as the vaccine kicks in. We're at all-time highs in all the indices. Does it mean that there's more room to go? I think a lot of time you see, novice traders, they go, okay, I'm at the high, I got to sell here, I got to get out of it because it's going to reverse. For me, I would follow it. I would say, okay, there's room for more. If I'm wrong, I get out of it quickly and I use my stop loss or I use my protection. But I don't want to try and fight the market. I'm not smarter than the market. And all I can do is follow and look what's going before me and get on the back of it. It's much easier to ride a wave than to surf into it, to row back out. If anybody's ever been a surfer, you trying to get back out after you get into the beach is much harder than just sitting and floating in on the way in. So I would look to see what's out there. I think next year we may see another, people keep on saying the bubble is going to pop. If it pops, get out of it. But in the meantime, ride it. Simple as that.
Actually, I think traders have a good opportunity next year to increase their returns to access market, because what happened in this year have changed the face of the industry as a total. Most of the traders came to this industry in this year and in the back 2 months from 2019 because of the COVID-19. The lockdown has changed most of the clients' reaction to the market. As he said, market is bigger than all of us. We've seen the Dow Jones in 2003, I believe, in 7,000 points, and now it's 13,000. Euro was 86 cents, and also at the same time. It goes up to almost 1.6 to the dollar, and now it's going back. Market is bigger than every one of us. If you want to fight with the market, you will be out. Don't let your emotion control you in the market. You have to be clever. You have to know what you want from the market. Markets are never been closed. You will never, no one actually have been asking to buy or sell any of the products during the day, and he didn't find this product. Market is open almost 5 days a week, so the opportunity is still there. You can always trade what you are looking for. Just don't hesitate and don't rush in the trade. Just keep calm, take control, look for your account, and things will be fine for you. Thank you.
Amazing, great answers, guys. We actually have some questions from our viewers at home. I'm going to pass it off to Lena here. She's going to ask some questions.
Hello, everyone. So here we have some question. It's from live. There is a question says that, hi, how can I start Forex trading as a beginner?
Okay. Yeah, okay. My answer for this question is very simple. Like as I say in my first answer, the first question, that is always easy for anyone to start trading in the FX market. It's all about his choice. He has to select which broker he will actually select to open his account with. Of course, he has to understand the nature of the FX market and Forex product. I advise him or her to do some researches first about the FX market, about the currencies, about the CFDs, about the leverage ratio before going forward with any trading decision live basis. Yeah, so it's all about selecting the broker. It's all about understanding the market, practicing a demo account before that, then going with a small amount. And as I said, I always recommend for the beginners usually to start with a lower leverage ratio when they start the trading. Thank you.
I feel reluctant to repeat myself on what I said earlier on, and I'm here representing Avatrade, so I'm going to once again talk about AvaProtect. It's insurance. It's cheap insurance. if you're a new beginner and you don't really know what you're doing, use it. You, as I said, you gave the example earlier on where you know your decision, you know your strategy, and you want to follow it, and so you execute the trade. And you're putting insurance in, and nobody likes to pay money for insurance. But you know, the time you pay your car insurance every year, and you're never in a crash, and it's money thrown away. This one, you don't have a 50-50 chance of being in a car. I shouldn't really use that analogy. It's a bad analogy to use, but there's not a 50-50 chance that every time you get in a car, you're going to be in a car crash. But every time you do a trade, there's a 50-50 chance you're going to be wrong. There's a 50-50 chance you're going to be right. But for a very, very small fee, that you can put insurance on that trade and go, if I'm right, I reap the rewards of it, and okay, I pay the premium. If I'm wrong, I paid the premium, and I'm right back where I was, and I can reset my clock, and I can rethink my strategy. And I genuinely think it's the simplest way for not just novices. I mean, this type of mechanism is used by, you know, the hedge funds. The hedge fund managers, they buy a spot and they hedge it with an FX option. We've built it with a click of a button on your mobile app. Bang, it's done. And you can see it in real time. You can see how your option is kicking out. And if it does get executed, if you do lose your trade, your money is straight back in your account within an instant. It's basically, there's no way to lose from it. And that's a very hard thing to say in the trading world. So take that as you may.
Thank you. I do believe the most important thing, do not listen to what other people said. If you are trying to be a trader or to do any business, if you are searching, a lot of people will say, do this, don't do this. I do believe you have to do your own research. As Muhammad say, have training courses, do your own research, try to open a demo account, let's say, whatever, with any broker, and take time to learn. After that, you will be able to do whatever you want.
Okay, so now we will move to the next question. The question says that, what is the main key to manage risk post or during COVID-19? How you can, what is the main key to manage the risk?
Keep your mask on.
I did not get the question that much, honestly. Okay, but it sounds that the question is about how to manage the risk or in trading, like during the COVID-19. As I said before, we have witnessed like a high volatility in the market and an increase in the volume during COVID-19. So COVID-19 as a situation is not as like a barrier or obstacle for anyone to execute trading. So following the risk management modules like within COVID-19 time is exactly the similar as we are following it with the normal times. Okay, there is no problem about that. But we have to consider that, and due to the COVID-19, we have to be very sustainable about which product we are going forward, considering the safe havens, for example, like most of the people, they were trading in the safe havens like gold and other famous products during COVID-19. And this is the reason why we have seen the gold price have increased to historical levels of gold price, I mean. At the same time, risk management is always simple steps, like 1, 2, 3, like is lower leverage ratio, is being very careful before deciding any live order, by reading the news, by having like some skills of the technical analysis. So this is my answer to the question. Thank you.
Thank you.
Yeah, no, this one I absolutely agree, Mohammed. COVID is just a period in time. The volatility, the risk doesn't change. Okay, we've had slightly heightened increase in volatility in the last 6, 8 months, but it's not something that hasn't been before. It's not something that the markets haven't felt with, dealt with, rode the wave, crashed and came back. So your risk management doesn't change just because there's new volatility. There's potentially more opportunities in the market, but more opportunities means greater risk as well. So if anything, you just need to be more and more disciplined than you would normally be in times when there's low volatility. Currencies haven't really done, apart from just very recently, euro dollar cable have been sitting at the same levels for 6 months. And it's only now recently with the impact of Brexit started to move. Euro dollar is jumping up, over 120. It's at 110 for a year. So everything will come in waves and cycles, and you need to be able to adapt and to move your risk appetite to suit those. If you're someone that is very, likes risk, likes great opportunity, this is your perfect, this is your perfect storm if that's the way to use it. If you're averse to it, then you have to be reducing your position sizes. You need to be much stricter with your, your stop losses and your trade strategy. But I would just, caveat it all with, you decide what you need to do and don't change it. Make your decision, don't change it. Once you start changing your decision, it doesn't matter whether it's COVID or anything else. That's when you will, that's when you will fall a cropper. Make your decision, stick to it, and that's the only way to learn and get better at trading.
Thank you.
I think, as they said, COVID-19 is a period of time. It may end, it may take a longer time. Usually markets move according to geopolitical events and the news. So whether it's COVID-19 or any other lockdown or another situation, you have to maintain your strategy fixed. Never change your strategy during trading. I do believe that markets are fluctuate since the start, since inception. COVID-19, I do believe it do something for the business, but the strategy you have to keep strategy as it is. Don't change your strategy during trading.
So the last question is, what chart or tool you use to measure trade size on high, low, volatile day or any other trading day?
Can you just say that again? I didn't really get the question.
What chart or tool you use to measure trade size?
Yeah.
How can you know that it's low or high? This is the question.
Yeah. I don't quite get the question. Is it about picking an actual chart that
it's
identifies
like what chart or tool, like what kind of, like you can measure the size of trade.
Yeah, to be honest, I may be wrong. I would say that there's no answer to that. And again, comes back to something I said earlier on. Whatever chart I pick is going to be different from the chart that you pick. Is different from anybody else. I'm very reluctant always to go and say this is what you should use. This is what I think is the best tool for you, because again it comes back to personal choice. It comes back to what you like to trade in. It's what you're interested in. I would always say only make trades in something you know about. Don't make trades just because someone told you about it. You need to understand what you're doing, and that's why an informed decision is the only decision ever to make. And read as much as you can, learn as much as you can, watch as much video analysis as you can, educate yourself. And ultimately, when you come to make a trade, don't just say, I'm going to buy Tesla because everybody else is doing it, and I read stuff on the internet. And if you're going to buy Tesla, just as an example, we're not promoting whether to buy Tesla or not. Do it because you believe Tesla as a product is going to be here forever and is going to grow, and their battery life is going to be extended. Conversely, if you think Tesla's overbought and it's way too high because the battery life isn't there, that's your decision. No chart is going to tell you that. And when you want to make a trade size, it's up to you. You know how much money you can afford to risk. My profile is, again, different to everybody out there. So the answer for me is always going to be different for you. And I can't say that enough. If somebody that is going to go and he's going to put $1,000 in this, that might be small. It might be $1,000 might be, oh my God, I'd never do that. So each and every one of you in the room and out there, if anybody else, you know your own profile. If you want to risk $1,000, do it. If you want to risk $10,000, do it. But don't let somebody else tell you what to do.
Thank you.
Excellent, guys.
Yes.
Whoop, sorry.
Okay.
Throw it in there.
I believe the question is purely related to the technical analysis, and since it's related to the high volatility timing, I would recommend not to follow any technical analysis or any tools related to the technical analysis during the high volatility, because it's a risky time and no one actually could predict where the market is going, and no analysis could help the trader to know actually where the market direction is. But as a general answer for this question, me personally, I would prefer the Japanese candles. Okay, I would prefer like appointing the points of resistance and support. Okay, so this is actually in the long term it could be specified, but not during the high volatility timing. To be honest, thank you.
Thank you for answering.
I think no charts can ever tell you what is the high and the low. That's why they make the chart customized according to your needs. Most of the platforms doesn't offer fixed charts. You can customize your charts according to your knowledge. The chart for the euro will be different from the chart for the Dow Jones. It will be different from Tesla or Apple. The chart never tell you where to buy or to sell. He can guide you, but he will not let you know what is the high and the low. The charts are customized according to your knowledge. Some people are using RSI, some people are using Chinese candle. Charts never give you indication, but it can never tell you what the market is going to do next step. That's all. Thank you.
Thank you. Thank you all for answering. So we will back to you.
Right on. And that would wrap it up for the panel here today. Thank you very much, guys. Again, ladies and gentlemen, round of applause for our... Sorry? We're not taking any more questions. We're just kind of skipping into the next round. So sorry about that. Feel free to carry the questions on with the individuals at the booth. Ladies and gentlemen, there is tons of time to reach out to each individual at the booth, but we will be carrying on with the presentation. So again, let's not stop that. Round of applause for our three presenters
Thank you,
here.
everyone. Thank you.
Mohammed Halim from TeraFX, Derry Ferguson from Avatrade, and Mr. Sami Hamid from Noor Al Mel. Thank you very much, guys, for taking to the stage here today.